right, good morning, my good peoples. My final video. Yay! Okay, let's get her going. GDXY. All right, so GDXY went down 4.01, 35.45. And GDXY went down as well, but like a lot of the funds, when they're not capped, they do well. Better than the underlying. 3.79, right? So less. So let's see what they did. They put some trades on. They bought and sold, bought calls, sold puts, and then did another trade. So let's cover the synthetic first. Everything was in 270 contract increments, right? So let's go out to our 38 synthetic. So they sold puts, 270 contracts for $2.88, and they bought calls for $1.03. So they're able to put 50,000 more cash in the piggy bank. Why? The difference is when you're over the strike price, right? It's different than when you're under. So with the put being significantly under the strike price, they capture that money now with the hopes that it rises up closer to 38, so then the put becomes worthless, right? But at least it's a cash flow thing. It helps them. And then the other trade was 270 contracts in a matching scenario. Okay. Let's go back to May. Sold it for 10 cents, and they dropped down to a 37, right? Because now we're trading at 35.45 with 2 trading days still on that 524. So good for GDXY. They're looking like they're going to capture all of their weeklies. Well, when you decline a little bit, and from my perspective, GDXY, GDX and GDXY will fly once gold breaks out, and really silver's due to break out of its consolidation, and it's much more likely to run a lot further than gold will percentage-wise. So there's a mix of silver stocks and gold stocks, and most of the bigger gold miners also mine silver. So, you know, I'm very bullish, as I told you guys. And when you kind of understand it and you look at the chart and you know it, then I feel really good about where we are. I'll be buying the dips, right? I didn't get a chance to buy yesterday at 19. I bought on the open at 19.90. You know, I'll buy at 19.10, or if it opens a little bit lower, it doesn't bother me in the least because I'm super, super bullish on where this is going. So not a whole lot in our cash. We did jump up to 200,000. I thought I just put this in. I would have sworn I typed that in previously. Why it's not there now, I have whoops. Gotta add another 0. So that puts some cash flow in, and when that happens, it's easier for them to go put on additional trades, right? So again, now we're in a situation where we continue to capture money, and we're ahead of the game where we've already captured like 42, 43% of all these calls that have been written. So small amount of money, but we also have a small amount of shares. So we've got 20,850 that we've put in the piggy bank, and we, out of that 20,000, could all buy it back for less than 12. So 42.57% of the calls we've written. So that's what it's like to be ahead of the game, right? And actually, did I update these for today? I don't think I did, peoples. I know I went in and put this new one on here. Let me do that right now. So the 600 contracts have dropped down to 2.5 cents. Oh, sweet. So that's the kind of thing on Friday, if we're at 37 or something, they'll buy that back early in the day, maybe even tomorrow if it gets to a penny and a half, and write something further out. But they don't always do that. But let's see what else. So that means we're now up to, hold on, I did something wrong. It's 0.025. That's the problem. So you guys get to see how this works and how I've set these formulas up and tables and how I account for everything. And it should be a lot more visible to you what's happening, right, with these weeklies. So by moving down, we're further away from the 38. So I'm guessing, I haven't even looked at the number, it's probably 5 cents, maybe 6 cents. Let's see how far off I am. Oh, it's 3.5. I was off a little, but knowing that it gained a lot, right? Because you've got time premium, right? It's never been trading above 38 or above 38.5. So all it had was time premium from 3 days. Now it's got 2 days, right? So sometime tomorrow, this will probably be a penny and a half. This will probably be 2 cents. And then as long as we stay under 38 and 38.5, down at 35 something, this guy, we wrote it. Now here's what's cool. We wrote this and sold it at 10 cents when we were a little bit higher, right? So that's why we're 30% in the money. We wrote it for 10 cents and we could buy it back for 7 cents. And tomorrow, if we stay at 36 or in the 35s, this will be 3 cents, right? 2 cents. So that's how flat, slightly up and down allows you to collect the premiums. But you can make big money in the synthetic when you write one and you just blow it out. You just don't want to be too low on these guys, right? That's the constant. So look at this. We've now captured 80%. It's not a huge amount of money, but you get the idea. Now, on this particular guy, since we're writing 38s on our synthetic, each time we write one, we wrote 270, we got money because we sold the put for more than we had to buy the call for. So it's kind of like it's earmarked as a liability. Remember when I talk about paper? That's a real loss if we had to close it out. But look, we don't have to do anything till 7/19. So that's a lot of time. I think we'll see 38 within two weeks. It could happen in 2 days, but I think it happens in the next 2 weeks, and we probably go to 42 before we retrace some of that on GDX. So I'm pretty optimistic for this type of stuff. I'm not in the least bit worried about these. So again, 50,000 more shares were added, right? That's 33%. We only had 150,000 shares, right? So awesome job. And let's go take a look. This is allowing for a paper loss to accumulate, knowing that you have time with a bullish sentiment to blow by that and start making money while at the same time you're doing your weeklies, right? So here's all our weeklies with our new one. So, and this just summarizes what I show you in detail over there, right? We've captured 80.3 of the 20.8 thousand. And these are the stats, the same thing you saw on the other page. And let's go look at our payout. So 99% probability that we don't get a payout. None of the funds that start from like the 21st in the month have ever paid the beginning of the next month. There may be an exception someday, but I just don't think they'll do it. Because if they build up money here, then they have more money in the piggy bank. They can pay some out and keep a reserve since it's a brand new fund. But look at this, right? And we haven't even started really running on the synthetics, right? We still got 72,000 because we're selling those puts for more than the calls. And this, we're legitimately earning this money. Remember, this is the first week for the fund. So the way it's looking right now, they're going to capture 10 cents, right? And the thing about this fund, right now, it's not a high IV fund, right? Implied volatility for people that may be following GDXY that don't know YIELDMAX. So it's only targeting typically like a 30 or 40% annualized yield. But why I think that it will do way better than that is because on the synthetics, they're going to blow those out, because I see GDX over the next 3 months, 6 months, year. Of course, it could run to, it'll probably run to 65 on GDX before it has a substantial pullback, and it could come back to 40 from 65, right? So there's going to be periods on the chart where we run up 50% in 3 months, and then we turn around in a month and we pull back, half of where we ran. But over time, I see this next 3, 4, 5 year cycle just being a very bullish for these miners. They're at super, super low valuations to the underlying metals. And silver is so cheap now compared to where it's going. So anyway, I won't belabor all that. I know most of my people say you guys love it when I rant and talk. I mean, I could get into the charts and show you, but I got to add some charts here. I got a lot of cool charts because I live in this sector a lot, right? And I do a lot of analysis, so it's something that I understand pretty well. Okay, so that gives us that. Isn't it nice to be winning over here and winning over here, right? I mean, if this thing was to declare tomorrow and pay, it probably would pay 20 cents. Well, that's not bad for 3 or 4 days' work, right? The fund's brand new. So that's what I got. Again, Bruce out, finish my morning and get ready for the stock market to open. So this is not financial advice. I'm not a financial advisor. Please seek your own financial advisor before making financial decisions, as there's risk in all stocks and securities. Love, love, love the YIELDMAX dividend funds. And throughout time, I'm going to be giving you guys bullish and bearish things to tag along with this. I know I was about to say goodbye, but I want to remind you guys. So how I want to educate you and play this, get into GDXY. Okay, let's get through a run. Let's collect some dividends. There's a place in your portfolio. I will also tell you, if we go through a 3-month cycle where we're up 50 or 60% in GDX, the underlying, and I see it becoming where I pretty much know it's going to retrace, then I'll offer up some ETFs for you guys, for some of you that want to play the short or the bearish, right? You don't short, because shorting is more complicated, and sometimes you have to pay dividends on the underlying, and I'm not asking anybody to do that. Options is a way you could do it, but not all of your option permitted in your accounts. For those that are, we can talk about that. But there's some simple bull and bear GDX funds, right? So if I see GDX going to be retracing and you don't want to sell your shares, because remember, you're still going to collect some dividends going down, but your NAV can erode some, right? But if you're in one of these bear funds, that's going to offset any NAV erosion, and you're going to continue to get your dividend income. So just ask me questions and we'll talk, and I'll introduce a lot of this stuff. That's where I'm going to be evolving to help you guys in these YIELDMAX funds, because there's nothing worse than having NAV reduction. And people, especially the person that bought in, let's say GDX runs to 60, and all of a sudden we're at 40 on GDXY, and somebody buys it. Somebody tells them, oh, get in Bruce's targeted wealth creation, and he does, what can I do for him if my gut feel says we're going to go down to 30? Well, you go out and you buy something like dust, right, which is a negative, okay, I think it's a 2 times on GDX, right? You buy the ETF. It doesn't pay you a dividend, but it doesn't cost you anything in that sense other than buying the stock. And when it goes down, you make money, right? And I'll give you some calls and say, hey, in the meantime, if your NAV is going down in GDXY, you're still capturing, because some of you really don't want to trade in and out. I don't even like to trade in and out so much in these funds. That's why I went in and allocated, you know, about a third of what I intended to buy for GDXY on the opening, because I don't know when we're going to take off on the gold and silver stocks, but I suspect it's probably at the longest 2 weeks, and it'll probably run into mid-August, right? Before, and then it'll have been up a lot and sell off pretty good then. But that's my best guess right now on a model and a method. Okay, I already said all my things about non-financial advice. This is for fun and entertainment. See you guys next time. Bye.